Hi guys, a very good morning. Let's do the euro dollar, gold and UJ outlook for today. I will do the fresh outlooks along with you guys here live so that you can also start picking up on how I do the outlooks instead of me just sharing charts, so that it would be better for your learning experience as well. What we'll do is we'll do all the time frames: weekly, H4, H1, daily, and then I will tell you how do I organize my charts and my layout when I'm trading for the day, so that I can have a view on all the time frames, important time frames, and then we'll take it from there. Let's do the weekly outlook for euro dollar. If, as you can see, weekly swing structure is what? Swing structure is bullish. We have mitigated the discount area. There is no more FVGs left on this weekly structures. Our buy side liquidity target is this one. This is where our weekly should ideally be going, to the upside. Now let's go and check out the daily time frame. If you check out the daily time frame, our weekly internal is what? Our daily swing structure. If we look at this was our daily swing structure. Our daily internal had shifted bearish, and now there's a beautiful part about this. If you look at the premium and discount theory, price mitigated the discount of the swing leg and it shifted bullish again. There was a sweep of liquidity and a bullish swing, bullish break of structure, followed by a continued bullish break of structure right here, which is this one. Now this was the daily fair value gap where price came and mitigated yesterday. As you see, there's a nice little rejection from the daily FVGs. I'll just mark this. From tomorrow onwards, this DFVG would not exist because we have fully mitigated it. This is the daily fair value gap. Let's mark the previous day high and previous day low. This is the previous day high. This is the previous day low. PDL. The daily pullback objective has also been completed, and we might see a move towards the upside, which is in sync with the weekly time frame. Now let's go and check out the H4 time frame. On H4 time frame, this was our recent most H4 swing structure. Price mitigated the H4 FVG, which was also a combination of daily FVG and F4 FVG, which was yesterday, and we seem to see a nice reaction from this zone, which is a confluence of DFVG and H4 FVG. Now is there an FVG on the H4 structure below? Yes, there is. Should we get a reaction towards the downside? Unlikely, but if we get a reaction to the downside, then we know why price is doing this. Price is fractal in nature. On the daily time frame, it can create another wick by moving to this H4 FVG and go up. We have to be prepared with these scenarios. Now let's go and check out the H1 structure. On H1, what has happened? We had seen a nice bearish reaction, which was, let's consider this as our H1 swing structure. Now there could be two scenarios, right? Let's plot the FVG. There are these FVGs, which we see here. HFVG, where is it? Here. And then there is this HFVG right here. Now, what are the chances for today? There could be two scenarios. If price reacts from this FVG, we can very well assume that price can go down. And if it is going down, then we know that this is not the destination, then this is the destination, and this is the sell side liquidity which price has engineered. This is one scenario. The other scenario, if price goes and closes above this HFVG, then we know that this HFVG is the drawn liquidity. Do not assume that price will keep going up. If price has to go up, we can still play from this FVG to this FVG. There is this scenario where we have, based on the structural analysis of the H1 time frame. But do not start taking longs randomly from here unless you get some sort of a liquidation and a shift. This is what I would be thinking. If I have to go long, I would wait for price to liquidate the PDL and then mitigate this H4 FVG, and then we can place some sort of a long entry. I hope this was helpful. Now, if we have to make sure that we are on top of all the 3 time frames, how I would recommend is have your 15-minute here. Let me make myself smaller. I hope this is better. Keep your 15-minute here, keep your 1 hour here, and keep your 4 hour here, so that you are able to see all the time frames and then take a good decision during your trading hours. This is what euro dollar looks like. We have multiple scenarios. We won't be surprised on how market reacts. Let's wait for price to reach this HFVG and then see how it reacts. Do not assume that this will change because we have reached the daily fair value cap, because there are other reasons why price could potentially go down, and we need to be careful about that. If price goes down, we know that on daily there could be another wick and then a pin bar candle. Now let's go and do the XAUUSD Outlook. If you see my screen, weekly. On weekly there's nothing much to do. Actually the structure was right here. If you see the weekly swing structure, this is the weekly buy side liquidity where we could be hunting towards. On the daily time frame, there has been a sideways trend for the last, I don't know, 3 months or so. But if you look at here, there was a daily fair value gap which price has mitigated. DFVG, this is the previous day low. Let's just keep the fresh DFVG here, and then this is the previous day high. Now if we go and check out the H4 structure, on H4 our structure has shifted bearish, which is right here. Are there fair value gaps where price can come? Yes, there are. There is this H4 FVG which we can mark it to be sure that this is one of our area of reaction, and then this is the H4 FVG right here. We can possibly see price reacting from this H4 FVG to the downside. Now let's go and check out the H1 structure. On H1 our structure is swing structure. The structure is still bearish, which is here. Now what could be the scenario for today? Let's mark the HFVGs, which are right here. When you are dealing with multiple time frames, H4, H1, etc., I've heard from a lot of people that they get confused. But idea is to simplify things with a lot of higher time frame pictures, that you know that these are. Now for example, if there is this HFVG here and there is one HFVG here, which HFVG would I be more interested with? It is obviously this one, because on H4 there is no reason for price to go up to here. But here there's a confluence of HFVG and H4 FVGs. I would rather simplify my view and just do this, right? That this is the buy side liquidity. Let price liquidate this, mitigate this HFVG which is confluence with H4 FVG, and then take a short entry. The other long entry idea is if price goes and mitigates this and then gives some sort of a fractal H1 shift or on M15, then you can take a long entry up to this HFVG. Do not get confused with multi-time frame analysis. Idea is to find out confluences and figure out high probability areas, which is this one. Now if I have to arrange my day, I would have M15 on the leftmost side, which is here, which is this one. This is my H1 in the middle, and then H4 here. Now I'm sorted, right? Now I'm able to view all my time frames at once, and I know which are my areas of interest. This is gold. Now let's do USDJPY. Let me just delete everything. On the weekly time frame, our recent most structure was this. Weekly was bearish. Now what did price do? Price completely balanced this weekly FVG. It came up, it balanced this FVG and it gave a bearish reaction, and for the last 2 weeks it has been sideways. This is what we can see from the weekly time frame. On the daily time frame, to facilitate the weekly pullback, price had shifted bullish, which is this one. This is our daily time frame. Our daily structure is bullish. Price came, and if this weekly fair value gap had to hold, we would have seen a break of structure, this on the daily time frame, right? If WFVG has to hold, but instead what happened? Price mitigated this daily fair value gap. Price mitigated, and it is apparently showing a reaction from it. Now if we look at the PDH, this is the PDH, previous day high. This price actually had to go down, but it is not. It is reacting off DFVG. Is there a DFVG that could stop price from going down? Yes, there is this bearish DFVG, which we can assume, because the reason why I'm telling price could potentially go down is because we are reacting from a higher time frame area. So I'm not so interested in long. If price closes above this week, above this WFVG, then next week I can think of playing along from the inverse fair value gap on the weekly time frame. I hope you understand what I'm trying to say. This week I'm only looking for longs, but from a daily time frame, this week I'm looking for shorts, but the only area where I can look for shorts is this bearish DFVG, which we see here. Now if we go and check out the H1 time frame, our structure is bullish, which is this one. This is a bullish structure. If you carefully observe, what did price do? Price failed to create a new high. Now if price closes below this, then I can assume that my H1 structure has shifted bearish, and then I can possibly look for a short entry on the H1. I would want an H1 shift. I wouldn't take a short. I wouldn't take a long anyway, because we are reacting from a bearish weekly FVG. I wouldn't take a short until H1 shifts bearish here. This is what I'm planning for USDJPY today. If we look at how I would arrange my charts, first is the M15, which is this. Then I have the H1 chart in the middle, and then I have the H4 chart. I can look at all the time frames in parallel. H4, H1, everything looks bullish, but I am looking for shorts because we are coming from a higher time frame area, and I could be completely proven wrong. If price closes above the weekly fair value gap in this week, then next week I would shift my bias. This is what the USDJPY analysis looks like. I hope this was helpful to you guys. Let me know in case you have any questions or comments on how I did the full top down from weekly, daily, H4 and H1, and let me know in case you have any questions and comments in the